2018 to 2020. Trump's trade war with China. Tariffs slapped on hundreds of billions of dollars worth of Chinese goods. Headlines everywhere screaming about standing up to Beijing. Both political parties talking tough about bringing jobs back home. The entire political establishment suddenly united around one message. We're finally going to fight back against China. And during those exact same years, BlackRock, JP Morgan, Goldman Sachs, and the rest of Wall Street quietly moved $1.4 trillion into Chinese markets. Not 105 billion, not a few hundred billion, $1.4 trillion, with the peak in the year 2020, the absolute height of the trade war. Now you might think this was a mistake, bad timing. Maybe Wall Street just got caught off guard by the politics, right? Wrong. This was one of the most predictable moves in modern financial history because there's a pattern that's repeated itself for more than 300 years. A pattern so reliable, so mathematically precise that once you see it, the entire story of what's happening to American economic power right now becomes crystal clear. And we're in stage 3 out of 4. The global financial system isn't random. It isn't chaos. It operates on a 4-stage mechanism that has destroyed every single reserve currency in recorded history. Stage 1. Financial elites create a monopoly on money creation through a central bank. Stage 2. They use that monopoly to finance government expansion through debt. Everything looks great. The economy is booming. The empire is expanding. Everyone thinks they've finally figured it out this time. Stage 3. The system overextends. The currency starts losing value. The government starts losing control. Cracks begin to appear. Stage 4, and this is the critical part. The same people who built the system move their money into the next rising power before the collapse becomes obvious to everyone else. The population is left holding worthless paper. We've seen this in Britain, in Germany, in America after 1971, and it's happening again right now. As Wall Street pours money into China, while Washington puts on a public show about getting tough with Beijing, the pattern keeps repeating. Let's go back. Britain is at war with France. The government is running out of money. A man named William Paterson comes up with what seems like a brilliant solution. Create the Bank of England. The deal is simple. The bank loans the government £1.2 million at 8% interest. But the real genius isn't just in the loan itself. The government creates debt. The bank turns that debt into money that circulates throughout the economy. And the wealthy subscribers to the bank collect interest on the nation's entire money supply. Stage 1 is complete. Within 4 years, Britain's national debt explodes from £1.2 million to £16 million. By 1815, after financing the Napoleonic Wars through continuous money printing backed by government debt, that debt reaches £885 million. The lenders didn't just profit, they effectively owned the British government. Stage 2 kicks in almost immediately. Britain builds the largest navy the world has ever seen. It colonizes half the planet. The pound becomes the global reserve currency. International trade runs on British pounds. Foreign governments hold pounds as reserves. Everything looks unstoppable. Britain sits at the top of the world. But here's the part most people never hear about. By the mid-1800s, cracks start to show. British industrial production peaks and then begins to decline relative to Germany and the United States. The cost of maintaining a global empire grows faster than Britain can afford. The debt starts climbing again. And this is where it gets interesting. The very same financial institutions that built the British system begin moving their money to America. British capital floods into American railroads, American steel, American industry. The Rothschilds help finance American expansion. By the time Britain officially abandons the gold standard in 1931, by the time the pound collapses as the world's reserve currency, the architects have already rebuilt the exact same system in New York. They moved the money before the collapse. Stage 4 executed perfectly. Second example, Germany after World War I. The Treaty of Versailles hits Germany with 132 billion gold marks in reparations, massive debt owed to the Allied powers. The Weimar government faces a brutal choice: raise taxes to pay it or print money. They choose the printing press. The Reichsbank, Germany's central bank, begins monetizing government debt. It pays striking workers. It funds social programs. It keeps the fragile political coalition together. Then, in January 1923, France and Belgium occupy the Ruhr industrial region to seize coal and force payment. Germany's response: pay Ruhr workers to strike. Pay them with newly printed money. The money supply goes completely out of control. May 1923, 8.6 billion marks. June, 17 billion. August, 669 billion. November, 400 quintillion. By November 1923, $1 buys 4.2 trillion German marks. A wheelbarrow full of cash can't buy a newspaper. Workers are paid by the hour because their wages are worthless by the end of their shift. Prices rise during working hours. The middle class is wiped out. Savings evaporate overnight. And here's the part they don't teach you. This wasn't an accidental policy failure. Rudolf Havenstein, the president of the Reichsbank, deliberately bought foreign currency with German marks at any price, no matter how extreme the inflation became. The government publicly claimed this was necessary to meet reparations payments. British and French advisors at the time argued something very different, that this was intentional currency destruction. Later records confirmed they were right. The hyperinflation wasn't just tolerated, it was useful. It wiped out domestic war debts. It erased obligations the state no longer wanted to honor. And it destroyed a politically inconvenient middle class. When the crisis finally peaked, when Germany introduced the Rentenmark in November 1923 to stop the bleeding, the solution didn't come from within Germany. It required American loans. The Dawes Plan of 1924 brought Wall Street directly into Germany to restructure the entire system. US money flooded in throughout the late 1920s. American banks and corporations gained massive exposure to the German economy. Then, when that system collapsed in the early 1930s, creating the conditions that ultimately brought the Nazis to power, those same American financial institutions were already positioned for what came next. Same pattern, different century. A central bank monetizes government debt. The system expands through inflation. The currency collapses. Foreign capital restructures during the crisis, then exits before the political disaster fully unfolds. Now the third example, and this one is the foundation of the system we live under today. Bretton Woods, New Hampshire. Representatives from 44 nations gather to create a new global monetary order. The US dollar is pegged to gold at $35 per ounce. Every other major currency is pegged to the dollar. Foreign central banks are allowed to redeem their dollars for physical gold at that fixed rate. The dollar becomes the global reserve currency, backed by the largest gold reserves in history, sitting in Fort Knox. For about 2 decades, the system works. Europe and Japan rebuild from the war. The dollar circulates everywhere. American economic dominance is unquestioned. But then the United States starts using its unique position, the ability to print the world's reserve currency, to finance the Vietnam War, the Great Society programs, and the broader Cold War military build-up, all without raising taxes. The Federal Reserve expands the money supply. Interest rates stay artificially low. The economy keeps growing. Dollars begin flooding into foreign central banks as the US runs larger and larger trade deficits. By 1971, there are far more dollars circulating globally than the United States has gold to back them. France sees exactly what's happening. Under President Charles de Gaulle, they begin demanding gold in exchange for their dollars. In August 1971, President Georges Pompidou sends a battleship to New York to collect French gold. Switzerland exits the system on August 9th. On August 11th, Britain asks for $3 billion worth of gold to be moved from Fort Knox to New York. Paul Volcker, who was then Under Secretary of the Treasury, later said that when Britain, the country that helped build the system with the United States and had fought for centuries to defend its own currency, started taking gold for dollars, everyone knew the game was over. By August 15th, only 10,000 metric tons of gold remained in US reserves. On the evening of August 15th, 1971, a Sunday night, President Richard Nixon goes on television and announces that the United States is temporarily suspending the convertibility of the dollar into gold. The gold window closes. That temporary measure is still in effect today. The Bretton Woods system collapses. By March 1973, the world moves to floating exchange rates. The dollar becomes a pure fiat currency, backed by nothing more than government promise and US military dominance in global oil markets. Since that moment, the dollar has lost over 98% of its value against gold. In 1971, gold was $35 an ounce. Today, it's over $3,000 an ounce. Same pattern. System overextension. Loss of monetary discipline, currency debasement. So now let's apply this pattern to what's happening right now. July 6th, 2018. Donald Trump imposes the first tariffs on Chinese goods, $34 billion worth. The trade war officially begins. America is finally going to stand up to China, rebalance trade, bring manufacturing back home. Both political parties support it. The establishment is united. But July 6, 2018 matters for another reason. It's exactly 1 month after June 1st, 2018, the day MSCI, the company that controls some of the most important global investment indices, officially begins including Chinese A shares in its emerging markets index. Think about what that actually means. When MSCI includes a market in its indices, institutional investors that track those indices are forced to put money into that market. Pension funds, sovereign wealth funds, university endowments, insurance companies, trillions of dollars that simply follow the index automatically. China's weight in the MSCI Emerging Markets Index goes from essentially 0 to 43% by October 2020. During that same period, from 2018 through 2020, US portfolio investment into China reaches $1.4 trillion, with the peak in 2020, right as the trade war is at its hottest. BlackRock expands its Chinese operations throughout this entire period. JP Morgan receives approval for a majority-owned securities business in China. Goldman Sachs increases its stake in its Chinese joint venture. These aren't accidents. These are the same institutional structures that operated through Britain, through Germany, and through post-war America, and they are executing Stage 4 right now. Let's check the boxes. US national debt, $36 trillion. Debt to GDP ratio, 98%. The Federal Reserve's balance sheet was under $1 trillion in 2008. It exploded to $9 trillion during COVID and still sits above $7 trillion today. Same mechanism as always. The central bank monetizes government debt. The government spends far beyond what taxes can cover. The currency supply expands far beyond the economy's productive capacity. And the financial institutions that manage and benefit from this process begin moving capital to the next center of power. Stage 1. The Federal Reserve is established in 1913, creating a monopoly on money creation. Stage 2. Decades of debt monetization, financing wars and government programs across the globe. Stage 3. The system becomes overextended, debt reaches 98% of GDP, and the currency is steadily debased. Stage 4. Financial institutions move capital into China while Washington performs political theater. We are here right now. The pattern does not care about your political preferences. It does not care whether you believe in American exceptionalism. It does not care about technology saving us, modern monetary theory, or any other intellectual framework designed to argue that this time is different. This time is not different. The mechanism is mathematical. When a monetary system is built on debt creation, when the entity that creates money is separate from, but dependent on, the entity that taxes, the outcome is predictable. When the system expands beyond its productive capacity, the currency is debased. And when the currency being debased is the global reserve currency, the architects of that system move their capital before the collapse is complete. Here's what most people miss. The trade war was theatre. It was designed to fail, or more precisely, it was designed to look like resistance while actual financial integration accelerated behind the scenes. You cannot fight China with tariffs while your largest financial institutions are moving record amounts of capital into Chinese markets. You cannot reshore manufacturing while the index providers that control institutional capital allocation are increasing China's weight in global portfolios. You cannot maintain dollar hegemony while running trillion-dollar deficits, financed by central bank money printing. The contradiction is not an accident. It is the mechanism. The British population did not understand in 1880 that their capital was building America. The German population did not understand in 1929 that American banks had helped facilitate their hyperinflationary cycle. And the American population today does not understand that Wall Street is building China's financial infrastructure while Washington performs resistance. But the pattern does not require your understanding. It simply executes. So what do you do with this information? First, you recognize that the machine is already in motion. You understand that by the time this becomes obvious to the mainstream, the repositioning will already be finished. You understand that the current system, the dollar as the reserve currency, American financial dominance, the post-Bretton Woods order, is not permanent. It is stage 3 of a 4-stage pattern, and stage 4 is executing right now. You position yourself accordingly. You understand that holding assets denominated purely in a debasing currency is a conscious choice to participate in the transfer mechanism. You understand that inflation is not temporary, not transitory, and not simply the result of supply chain disruptions. It is the predictable outcome of monetary expansion disconnected from productive growth. You understand that when they tell you not to worry, that this time is different, that modern financial engineering has solved the problems that destroyed previous systems, they are either ignorant of the pattern or complicit in its execution. And you understand that the next 5 to 10 years will not look like the last 30. The mechanism is accelerating. The debt cannot be repaid. The currency will continue to debase. The financial elite are already positioned. The only real question is whether you understand the pattern clearly enough to see it unfolding in real time and make decisions that account for the inevitable outcome. This is not prediction. This is pattern recognition. The same mechanism that moved British capital to America in the 19th century. The same mechanism that moved American capital into Weimar Germany before its collapse. The same mechanism that moved capital out of the United States as Bretton Woods failed is now moving capital into China. Right now, while politicians argue about tariffs, while think tanks debate decoupling strategies, while the media obsesses over the optics of a trade war, Wall Street has already decided. $1.4 trillion has already moved. And the pattern, which has never failed to complete itself, is already 3/4 of the way through its execution. If you want to understand what happens next, if you want to know how the final stage of this pattern completes, if you want to see how the transition from American to Chinese financial dominance ultimately finalizes, then you need to understand how the machine was built. You need to see the institutional architecture that makes this transfer possible. And you need to recognize that every historical parallel points to the same outcome. The population holds the currency as it approaches zero, while the architects of the system have already moved their wealth to the next center of power. That is the pattern. That is the mechanism. And that is what is happening right now while most people watch the political theater and miss the systematic transfer of wealth unfolding behind it. Subscribe now if you want to see how the machine was built, how it operates in practice, and what the completion of Stage 4 looks like when it arrives, because it is arriving. And unlike every time before, this time you have the opportunity to see the pattern while it is still executing, instead of only understanding it after the collapse is complete.